And good evening. This is the Elliott wave update for the S&P 500 for Monday, November 22nd, 2021. The rally did continue first thing this morning, right out of the opening, and the S&P did manage to reach up to the 100% level, where minute wave 5 would be equal in length to minute wave 3. Got a little bit above it, actually. And at this bar right here, got up to 47.40, and that was a pretty good run. And the market stopped, reversed, and dropped quite a bit. It dropped actually about 60, let's see, altogether about $65 down to the low before it recovered just slightly into the bell. And as we now go in after hours trading, they are adjusting positions and kind of putting things together. And so the market has lifted up a little bit off of the lows at the close. Now, what does that leave us and where does that leave us? I have gone through, so again, just to do a quick review, we are in what I believe now has a very strong possibility of being complete, a minor fifth wave advance. Now that minor fifth wave advance is going to be closing or finishing several degrees of advances, advancing sequences, as I've been calling them. And the largest of which began in 1932. So therefore, we are completing not only a minor fifth wave, which I've marked right here, we're completing an intermediate fifth wave, a primary fifth wave, a cycle fifth wave, and a super cycle third wave. So it's that super cycle third wave that actually began in 1932. The rest of them, our primary fifth wave began at the March 2020 lows. So that primary fifth wave and that intermediate fifth wave have really only been in force for a year or so. So about a year and a half, and then the intermediate would be a little bit shorter than that. But nonetheless, these markets have been completing. In fact, the cycle level market for the S&P, the cycle 5, began in 2009. So if we go back to that level, so we have about a 90-year cycle that's finishing up here. We have then on a cycle level, we have a 12-year cycle. And then on the primary, we have about a 1 3/4 year cycle. And then on the intermediate degree, likely about a year and a half or so of a cycle, and then on down. Now, if this level completes all of those advancing cycles, the first thing that I'm going to look for is a 5-wave decline on the hourly chart. So let's just open this up a little bit. Not much to see, but we can see that right off there, maybe this is 1, 2, and we're starting in the third. Maybe this is a little 4, and then we have an additional low to put in. And then on my hourly chart, we have 5 waves down. And so on that basis, I put the 5 and the 5 here. And now we just have to let the market do the rest. So I'm not putting the balance of it in because each time I've done that, the market has turned around and fooled us, fooled me, and drove prices higher and to new all-time highs again and again and again. So I'm just going to leave it right there until I get stronger confirmation, which in yesterday's update, I was basically saying that I would like to see this whole wave come down to complete and show me that the highs are in, break 46.25. Once it starts to break below 46.25, I'm going to be much more convinced of this decline being for real. But dropping 60 off of that high is fairly convincing that those highs may be in and done. But if I had to really put this into perspective, even though this is ending up as green, if it would have closed there, it would have stayed red and maybe would have produced some additional downside. So I can't really say that the market's done a 4 and a 5. If I'm saying this is 1, 2, 3, and then somehow there's a 4 in here and a 5. So unless let me just take it down to a 30-minute chart. Let's just take a look to see if indeed, and so you can see here, it's the same thing. I'll go down one more to a 15 because sometimes I miss things. But more importantly, as I have suggested, no, here the same. We're up. So I'm not really seeing that. So in that being the case, we're going to allow for a little 4 to come and form right there. And then an additional low, and that low would have to take us below 46.74, because in essence, that is the bottom of wave 3. So this would be a 1, a 2, and a 3. Now, if from this level, and from this level, the market climbs back above the 200 and keeps rallying, gets above the 4, gets above the 50, it's going to be left as a 3, because here, basically, would be the bottom of wave 1 of this new 5-wave decline, if it turns into a 5. Otherwise, I got an A, a B, and a C. That's why I am not putting all the rest of those tops up there, because the market still has potential. Not sure how heavy that potential is going to weigh on a probability scale, but I have to at least say a 25% probability that the market will turn around and go yet again up above 4,700. So the probability scale starts to drop as the market starts to drop, because the reality is, are they going to have enough to push it? Now remember, holiday shortened week, and that goes into several areas. There are many traders who maybe have taken the whole week, or likely will make Wednesday their last day prior to the holiday. So the market's closed on Thursday. It's a half day on Friday. And if many of the traders are already taking Wednesday off to get a head start to get to wherever they're going for their Thanksgiving holiday, we're going to have very thin volumes. So also on Wednesday, we have a slew of economic figures that will not be coming out on Thursday and Friday. So they're all being jammed into Wednesday. So even before the opening, we have a great deal. We've got jobless claims, GDP, international trade, and personal income and expenditures. So we've got 4 major market moving numbers, economic numbers, that can swing things in either direction. If the market loves them, they're going to jack this thing right back into the other direction. If the market continues to look at them going like, oh yeah, we really did put in a top here, now we're going to start going down, both sides are going to suffer in terms of as the orders hit the market. On the way up, it's thin. There aren't going to be any sellers just waiting to cash out. And also, if those numbers come in and produce a selling spree, they're going to have trouble filling larger orders, because all of the players that would be here to absorb that won't be here, won't be trading on that day. They want the day off, and possibly the balance of the week off. So it could produce some very strong, volatile moves in both directions. Fortunately, the first 4 come out prior to the opening. So we'll already know quite a bit by the time the market opens as to direction. And then again, the balance of those numbers, and I don't remember them right off the top of my head. Existing home sales, I believe, is one. The EIA crude report comes out on Wednesday mornings, which is normal for crude. And there's a couple of more that are coming out, but they're not necessarily huge market moving numbers, but they could be, simply because of what's going on with the balance of participation. So if we don't have a lot of traders there, we sort of felt that a little bit today as we were running up and we were breaking above resistance levels. We broke above 47.23, which was the previous high. We broke above 430. And then kept going, and we broke above the next one. And so, which was at 36. And then we got up to about 40. And that's when, they kind of ran out of steam. They ran out of buy orders, and then the sellers stepped in. And it really did free fall quite a bit. And if you notice this afternoon in that last hour going into the close, that really free fell. They were just, the sellers are moving in. And you were like, okay, what happened to all those buyers? Why aren't they stepping back into the market to support what they did this morning? It's because it was a one-off order. They pulled a whole bunch of people in to get them long right there. And then the afternoon was like, these are people that are redeeming, redemption versus new money in. Sad story, but we don't take responsibility for any of that. But I am looking at this as a 1, 2, 3, we get a little 4, do another 5, and then on my hourly chart, I will be able to count 5 waves down. That doesn't mean that all is said and done just yet. When I get the 5 down, if I get 3 up, I still can get an additional 5 down, and it's just a larger ABC. So again, we're still going to be in a wait and see type of a game plan, allowing the market to really roll out the intentions that are going to take hold over the next several months. Now, common theory and common talk out in market land these days is that November, we have all of the Black Friday deals, which, by the way, I'm running some of my own for my trade room. I've got some great Black Friday deals going. So I'm also participating because it's a time of the year where they want more sales, so we get great deals. And therefore, when you're getting them across the board from all of the retail sector, then there's that thought of, well, then you have post a Black Friday. And if there's been a lot of sales on Amazon, a lot of sales on a lot of the retail sellers, Target has got them, Costco has got them. Everybody's got the big Black Friday deals going. So if those all turn out to be really well, then people are going to expect that retail sales are going to support everything, and they're going to come in and buy it so they can buy the market up. Yet to be seen, but this is the common theory that's out there. Plus December, right around the corner. And once December begins, then we have also, well, we've got our year end, the Santa rally, going to happen. These are almost, people say them as if they're a given. This is going to happen. Now, in my purview, in my way that I look at things, that's just hanging on to the status quo. That's the way it's always been. I'll tell you, every year we do the same thing. It's like, really? How about this year they don't? What are you going to do then? You're going to stand there and buy it anyway? What if they don't buy it? What if they don't come in and just really blow the doors off of all of these Black Friday deals? What if they don't line up outside of Walmart and Target and Kmart to go running in, and Best Buy to go running in and buying TVs and buying all of these different things? What if there's not any money out there to do that? What if people are already peaked out? What if they're now worried that they see interest rates, looks like they're going to go up. The dollar's going through the roof. What does that mean? Rates are going up. Why else do you want to buy dollars? So that you can lend them back out for a higher interest rate. That would be one factor. What's going to give it more value? Higher interest rates. What's the big deal here? Interest rates. Remember, one of my things that I constantly say, interest rates sit at the top of the food chain. Everything else gets its direction from what happens in interest rates. And that's just the way it is. So We've got Fed stuff coming out. We've got a lot of things that are going to lead us to where and what will be coming in the next several months. So I'm not going to latch on to, well, we have a Santa rally. If it happens, great. We'll be ready. We'll be able to trade it. If it doesn't happen, fine. We'll be ready. We'll be able to trade it, because I'm not planning on looking forward to it. I'm going to take it day by day, and as the market tells me what's going on. And that's what I'm going to do right now. I'm telling you that I believe tomorrow we should get a little 4. We may not, but we should get a 4. Maybe it comes back up to the 200, maybe a little bit higher. But then I believe we'll get another leg down, and that then will complete the first 5 down on the hourly chart. That sets us up for a bounce, for a rally. Now, whether that happens tonight during Globex, and then we get the rally, and then we get to participate in that tomorrow, we'll be looking for it to be an ABC structure. And once that's over, I will be looking for additional downside, and at least an additional 5 waves down. So I continue ultimately to look for 46.25. But now let's just throw in some additional retracements. Now, all I'm going to do is from that low, which is where minor 4 is, I just wanted to put in retracements for this minor 5. So we get some idea of what to expect as the market starts to peel off. Well, we can already see that it's already zipped through the 382. It has zipped through the 50% and now is holding right at that 50% pretty much. So next up, we have 618 at 46.68, which, gee, that goes with the previous 4. So I would expect support there. But if it breaks, then we have 46.58, which is what I would call a sweet spot. You're going to hear that term from a lot of different people. And if it holds 46.58, 59, even down to 50, 55, then we're going to get a bounce. But if I get a 4 and a 5, then hey, that all fits. But it would be in that next sequence down, then I'm looking for it to get below 46.25. That is still in the cards. Then I'm going to make adjustments, and I'll take this up to the 4-hour, and I'll show you how we start to make our adjustments so that we get support levels coming off. Here we have, that's the minor 4. We get a few points inside of these waves that went up, but they're not going to be strong. See, this one still, we get some additional support from the extensions within that retracement, within the retracement. We get 100%, then we get a 1, 2, 3, 6, 1.618. But we're coming down to this 4, which is going to be down here at this bottom, 45.52. Those will all provide some support. Then it starts to, you can see it thins out. But that's just showing you that the rally was very intense and strong on the way up. So the decline is going to be just as likely, but on the way down. It's going to be in the opposite direction. We do have some support at 43.21. So again, we've got it here on the 4-hour 200 at 45.93. But I'd be looking, once it breaks 46.25, 26, that's the next level. I'm looking for it to break below 4,600 and start aiming for this 4-hour 200. But eventually, the whole process should bring us back down to here, 42.60. So, excuse me, come on, where is this low? So it just gets so funky, 42.60. Yeah, 42.60. So those are not unrealistic levels to be looking for. I mean, this is September, we were down here. So from September, we've gone from 42.68 to 47.40 in 2 months. On September 30th, we got up there. So basically 2 months. Amazing, but great work, market. So now we're going to retrace it all the way back. So what I'm looking for tomorrow, Let's just kind of go back and do a quick review, and then I'm going to wrap this up and we'll call it a day. I think we continue lower. We have supported 68, 69. We have supported 58, 59, down to that 55 level. We have much stronger support at that 46.25 area, but that I expect to be broken as this initial wave continues to form. But maybe that first 5 brings us to that level. Then we do a rally and everybody thinks it's all over, it's all done. And then we come down again, and then I'm going to be looking for those lower levels. But right now, we got support all the way down as marked. Upside, difficult, because I don't necessarily see the buyers jumping back in tomorrow. So I'm going to call that we can run Fibonacci's from the top of this wave, which was set 47.29, down to the low, or wherever this low happens to come in, and then just get what this particular wave is, what the potential is. I would say that we should find resistance at 46.86, excuse me, and then 46.93, 46.96, 47.04. So we have resistance via the moving averages. With continued downside still expected, I would not be looking for a move back above 4,700. So wherever this 50 ends up declining to, I would think that that holds back rallies. They can get up to that level, but I think it should hold back rallies. A break above, it's going to leave this as 3. More than likely, we'll leave this at 3, and then we're just off to the races. And for whatever reason, the market's going to discount everything that happened today. Possible. Not looking for it, but possible. So we have our upside story, we have our downside story. And that's where I'm going to leave it. Continue to trade using moving averages. They really were significantly impacted today, and they proved true to what happens. So in other words, when these markets started to break below that hourly 50, boom, it accelerated. The hourly 200, it accelerated. Not as quickly because we were moving towards an end of the day. But then they sort of did continue. So if they break above and they get an hourly bar to close above, then we should see some nice continued movement up towards the 4, towards resistance, towards the 50. Downside, we know what that story is. And the moving averages will continue to guide it on the way down. I would imagine that this 4 and 8, the 8's got a lot of catching up to do, and so does the 20. So we slid pretty quickly. The 4 and the 8 and the 20 need to catch up a little bit. But once they start to drop below this 50, that might trigger a little bit, another couple of rounds of some stronger selling. Okay, that's where I'm going to leave it. Trade smart tomorrow. Trade according to what the moving averages and the price action is telling you. Don't try to pick a bottom. Don't try to pick a top. We have no idea what awaits in the way of scheduled sell orders, scheduled buy orders, and how much demand is going to be on each side from, if they're sellers, how much demand from to the buyers is going to be there. And vice versa, if they're all coming in to buy, how much demand for the sellers is going to be there. Will the sell orders be there? How free flowing will the market have to go? Because it needs to find value, either as a seller or as a buyer. They need to find value. Where can they get the order completed? Next update, Tuesday, the 23rd.